Welcome everyone to our bi-weekly update here at Gentian. It's good to see you all today at our new time, 9 o'clock. If you didn't know about the 9 o'clock time, it's good for you to watch this again whenever it becomes recorded for you to watch. If you are expecting it at 11, there'll be a recording for it. So with the new time and springtime, we thought we'd actually just move it up a little bit. I mean, you obviously know what time. It's called the trampoline season. Trampoline season is, of course, the time we call springtime. And it's a good chance for us to kind of get ourselves out and going. So as the weather gets nicer, we thought we'd actually move this to the 9 o'clock time frame, and you'd be able to watch it then. So welcome to our bi-weekly update. And what I wanted to do is also start with a bit of gratitude. I enjoy the fact that we've had some adaptability opportunities, which I'll talk about in the webinar a bit here. We've had spring break just recently, got to spend some strong family time myself, and really enjoy right now just this season of opening of the robins coming back, all the birds flying through. It's a wonderful, wonderful time. It's a time of renewal. So it's something we all need right now. But what I want to do, if I may, I'll go into actually maybe just start, Ken, how about gratitude for yourself real quick before we throw this over to for housekeeping?
Yeah, thank you, Chris. Appreciate it. Welcome, my friends. It's good to be with all of you today. And my gratitude, I'm going to brag a little bit about one of my children, Adriana, who's 9 years old in the 3rd grade. Had a writing competition recently, took first place in Ozaukee County, and then it went to state, and she just found out that she took 3rd place in all of the state of Wisconsin for her writing abilities in the 3rd grade. So we're very proud of her. It was kind of her first big win, if you will, and it gave her a lot of confidence moving forward. So I'm grateful for my daughter, who gets it all from my wife.
Thank you. That's
Back
awesome.
to you, Chris.
Congratulations. Congratulations, Adriana. That's awesome. That's great, Ken. Thank you. Thank you. How about Zach? How about yourself?
Yeah, thank you, Chris. I'm actually very grateful for the life of pets. So a sad thing, we had to put my 11-year-old black lab down last Saturday, but grateful for how much pets become part of the family and how much it brings family together. It was a very sad time for my family, obviously, and tough decisions were made, but just extremely grateful for the life of a great dog and also how much it brought my family together. So partly sad, but also extreme gratitude for family and just the life of pets in general.
Awesome. Thank you, Zach. Sorry about that as well. I understand that. That's always tough when you have a 14-year family member that you have to put down. Well, with that, I really appreciate your gratitude. Hopefully you've got something you're grateful for as well, and you can take a moment for your Gentian gratitude journals, which I'm sure you journal in every day. And go ahead and write down a few things that can brighten your day or your week as well. But with that, I'd like to bring it over to housekeeping with one of our newer members. And some of you have spoken to her. It's Jen Podolak. She's fantastic. You'll see her, hear her on different programs. She's actually putting together a new website, new marketing, some of the new look. Ashley and her and Kristen are combining to put together some of the new look for Gentian as well. So I'm going to turn over to Jen today for our housekeeping. Thank you, Jen.
Thank you, Chris. So welcome, everybody. Nice to meet you. I guess I'm going to start housekeeping with a question. So does anyone have plans for Friday? If not, we invite you to join us down at the Mequon Public Market as we partner with Gathering on the Green to bring you guys a live musical performance. The Oxleys will take the stage at 6:30. It goes till 8:30. These are socially distant concerts, so we really invite you to stop down. Great food, great atmosphere. We have lots in store for the remainder of the month, kicking off Earth Week. So Sunday, we're also going to be back at the Mequon Public Market with Gathering on the Green. They're putting together a whole host of activities for families. So that'll be from 10 to 1. Pop-up market, lots of cool things, as well as a musical performance there. On Wednesday, April 28th, if you haven't registered already, we're going to have a Health and Wealth Part 2. So if you didn't make Health and Wealth Part 1, you missed out. So this section will be our Q&A. And I just want to remind everybody that you can ask questions. So there will be a lot of opportunity for you to learn from this professional. We also included in your bulletin the tip of the week and a recipe of the week. So feel free to leverage her as well. We want to also remind you to watch your emails for the latest Nick Murray. And I think that's everything.
Awesome. Thank you very much, Jenny. Again, a lot of things going on here, Gentian, in the spring. So please take advantage of any of you'd like to. And Jenny, thank you for the housekeeping as well. So let me start today. There's quite a bit that's going on. So I'm going to break into some of that. I probably could use 4 or 5 hours to go through this. But I had a wonderful opportunity. I'm grateful for adaptability. I know it's another go big, but I'm grateful for adaptability. So I just got back from a spring break trip, which was wonderful. I've been in 9 states in the past 10 days. Went to Iowa for Thursday, Friday, Good Friday, if you will, and spent a day with my mom and a day with my mother-in-law and my wife's family, and that was great. And then came back to spend Easter here because our daughters wanted to be here. So that was a wonderful trip. And then Sunday night at about 10 o'clock, booked a place 12 hours later to go to Fort Myers, both a flight, a car, and a Verbo house. So we stayed away from quite a few people, which was nice. But it was a wonderful trip, beautiful weather down there. Is what the adaptability came when we went back to fly home on Sunday. Apparently, when you have a thunderstorm in Fort Myers, the entire state of Florida shuts down, and all of the flights that are the next 2 or 3 or 4 days actually are canceled or actually booked as well. So our choice of adaptability was, boy, we could wait here for 4 or 5 more days, or we could rent a car. So I hopped a car over to Hertz, got a Kia Sedona, and we looked at the number of hours to get here. It said 20. I said, all right, so it'll take 2 days to get here. Hopped in the car about 6 p.m., made it up to about Chattanooga at 4:30 a.m. It was a great time. We're just kind of humming along. Everybody's in the car asleep. I started feeling a little sleepy, so we decided to take a nap for 2 hours. Wake up at 7:30, beautiful sunrise coming up in Chattanooga, and then proceeded to trick myself into driving all the way home at 7:30 p.m. that night. So in 24 hours, we drove 21, made it 1,500 miles. And the funny thing is, the adaptability part is that was not part of our plan. There's people all over the airport who had their flights canceled. The funny thing was, I had filmed a line of American Airlines East Coasters who were quite angry about the fact that their flights were canceled. And it was a line of about 500 people. And I videoed it and I was going to show it to my wife. And I thought, boy, what if this happens to us? Our flight wasn't canceled yet. We were pretty happy about that. Turns out our flight got canceled as well. So all the stuff I had videoed to show my wife is quite funny, and the angry New Englanders and New Yorkers actually could have been us as well. But we gracefully accepted what it was, and it is what it is. And my whole family really did a great job of adapting to that as well and getting home. I saw a couple of wonderful signs, but I do want to tell you, instead of telling jokes, if you've ever been in South Georgia between 12 a.m. and 4 a.m., stop at one of the convenience stores or gas stations along the way. You will see a population of people that I didn't know existed. I don't spend a lot of time with. I guess I've never been there at 4 a.m. before 3 a.m. But it's really an interesting place. Super nice people, just live different than all of us. So a lot of people out there, I thought there'd be no one. I was wrong. There's quite a few people who live and are awake between 12 a.m. and 4 a.m. So at any rate, it was kind of an interesting piece. But actually, that reminds me, I think of a joke I might have heard. I was asking somebody there, say, so what's your favorite foods? What are your favorite foods? And they said, my favorite foods are macaroni and cheese, which I thought was kind of interesting. I thought that was one thing, but it ended up being 2 down there as well. So very interestingly, so that's our trip. It was fun. It was a great adaptability trip, a wonderful memory, which we'll log as we go forward. But top of mind this week are some tax law changes, big things occurring with some conversations about tax law, a lot of proposition and supposition, a lot of things going on with the administration now about some spending as well. There's been some RMD questions, quite a few we've had this week on some of the questions we've had, qualified charitable distribution questions as well, and then Roth conversion questions. What order do they have to happen in? What order do they go in? And we'll go through that in a bit. You know, you have to satisfy your RMD with potentially a QCD before you do your conversions. So there's some strategies around that I know Ken has talked about before, Zach has talked about, and will continue to talk about. But we've also had a lot of conversation around small cap value and the recovery of global real estate. 2 asset categories that last year were quite out of favor. This year, one of them is up about 20%, and the other one is up probably 8 or 9 after being down 7 last year. So the one thing you always know for sure is you never know. It's called reversion to the mean. So that's why we don't make radical moves or get rid of asset classes because they're not performing well, because they do revert to the mean, and we don't know when, especially when it comes to predicting those kind of things. We just know that they will happen at some time. We've also had a lot of people talk about their travel in the fall. They want to get going. A lot of conversation around inflation and the fact that we might see some interest rates going up and prices are definitely going up. People wonder how they're measuring those as well. And then the question we have as well that's been big this last week or two is, in the end, should I spend everything I have all down? What should I do with everything at the end? What if my spouse goes into a nursing home? We've had some interesting conversations around that. And what we want to do again is over the next probably few months, begin to introduce some ideas to you to help you think of those thoughts and be prepared for what to do. The benefit of being prepared before it happens is you are able to make rational, smart decisions versus emotional decisions, which could take your entire nest egg and do something that you probably wouldn't want to do with it if you were less prepared. So we want to make sure we're doing that for you as well. And with that, I just wanted to thank you very much for all of your loyalty and patience with us going through this pandemic and the market moves as well. We really appreciate the questions and what you share with us. Recently got to share a little bit of time with one of my great clients down in Fort Myers. You know, it was Iris, and my family was there for a few hours. And what you start to realize after 15 or 20 years, it's more of a relationship of family, more familial than it is of just client. And it was beautiful, had a wonderful, wonderful time. But anyway, what I'd like to do, if I may here, is pass it over to Zach to talk a little bit about markets today and some of the different facts. Zach always has wonderful facts to bring to us. Zach, what do you have for us today?
Yeah, thank you, Chris. Just a brief update on the market indexes in general, like we normally do. But then today, as we mentioned last time, we were extremely excited to go through the numbers last quarter to see the effects year to date of the different asset classes and also reflect back a little bit in 2020. And we have some great learnings. Chris touched on it a little bit as far as asset allocation, reversion to the mean, and how that is really important for rebalancing and really the beauty of rebalancing. And then also just a cautionary thing for us as well, just looking back 12 months from today or from the end of last quarter. So year to date, S&P 500 is currently up 10.26%. The Dow Jones Industrial Average, 10.03%. The NASDAQ, which again is a little bit heavier weighted towards technology, about 49% of it, is up 8.6%. On the fixed income side, don't have as much in the depth detailed numbers like we did last time. However, a really interesting stat that Mike on our team found on a Lord Abbott webinar last week was 86% of bonds currently have less than a 2% yield. And only currently 5% are over 3%. So if any of you have tried to find a little bit extra interest on anything at the bank or anywhere else, you can see that it's a very tough time to find yield on anything. So we thought it was very interesting that 86% of bonds have less than a 2% yield currently. So to go through the different asset classes and the beauty of rebalancing, I'm just going to share my screen real quick. Chris and Ken, are you able to see my screen?
Yep, we see it. Thank you.
Excellent. So what we did is we went through and just looked at the different asset classes that we own in our Gentian core portfolio and how they performed over the course of the last few quarters. Essentially, these are year-to-date numbers as of those quarters. So a reset here starting in 2021. But when we look at it, the top 3 asset classes to start the year here in 2021 have been small cap value, mid cap value, and large cap value. The bottom 3 have been convertibles, large cap growth, and global bond. What's really interesting is when we look back in 2020 and how that was year to date as of these quarters, it was almost a complete flip. And as you can see, convertibles was the #1 performer year to date at the end of Q4, large cap growth, and then small cap growth. And then looking back, you can see that mid cap value, floating rate, global real estate were some of the worst performers at those times throughout that year. And really what we wanted to show with this is just at any point in these times, an annual discipline that we go through with you guys, and if you have been clients for a while, you know this, is annual rebalancing. As you can see, if we would have rebalanced at any one of these times, it would have been a great benefit to you. It doesn't necessarily matter when we rebalance, just that we rebalance. If we would have rebalanced in Q3, we would have sold off of a little bit of large cap growth, small cap growth, and convertibles. We would have bought a little more small cap value, mid cap value, and global real estate. If we fast forward to 2021, that would have been a great rebalance because those are now the top performers. We never know when that is going to happen, but it was just an extremely great learning year to show that these different asset classes perform better at different times. Just one last piece I'll leave you with here is just a cautionary is if you look at 12-month returns on anything or hear anyone talk about 12-month returns, whether it's family members, other advisors, anyone trying to sell a product or anything else, 12-month returns look extremely massive because one of the worst months in market history has now dropped off. The 34% correction we had last March has now dropped off. So just be careful if people mention that they got a 60, 70% return and just add a little bit of perspective to it. So
That's great, Zach. Thank you very much. I often tell people that if you want to talk to the oldest team member we have, you want to talk to Zach. Brings great perspective. He's not by age, but by demeanor and by discipline. So I'd say Ken and I probably tie for maybe some of the youngest sometimes. But that's just me. So thank you tremendously for that, Zach, as well. You know, it reminds me, recently I was talking with a client, you know, we talked about springtime here, and they were talking about, I really need something to do when I retire. I really need something to do. I said, well, you know, it's an interesting point. And they came back a few weeks later and said, Chris, what? I'm going to start a gardening business. I said, oh, really? Wow, I didn't know you were into gardening. No, he said, but I'm really interested in making my soil rich. I said, what? Then he said, no, Chris, I meant that was a wrong joke. I want to rake in the cash. So that made sense. They told me the wrong joke. It was hilarious because when they told me the first one, I go, that doesn't make any sense. Then they said they mixed up two jokes. They said the first one was, why did I bury all of my money? Because I wanted to make my soil rich. Both were quite funny. I appreciated them, but it was a great snafu with the client because I actually laughed courteously, going, oh, that was really funny. But I thought I'd share that with you. Ken, how about yourself? What do you have to show us in the planning section today and something you think is important?
Yeah, absolutely. Thanks, Chris. Nice job, Zach. And that was a great overview of rebalancing. Today, I'm going to talk about inflation. It's been in the news. It's kind of a current event, if you will. I'm going to share my screen here in a second to bring up a piece here. I'm going to try to get it as large as I possibly can for all of you at home there. So we'll go full screen here. Hopefully you can see that. Inflation. It's in the news right now. There's a lot of money being printed. I have a little bit of a cartoon joke here at the end that I can show you as well, but a lot of money is being printed right now. There's a study out there that there's been over $5 trillion allocated towards COVID-19. And when you look at the inflationary adjusted time, when you look at World War II, it actually has superseded World War II as far as the cost of trying to protect us as Americans in the world as far as COVID-19. So that brings up the idea of inflation. Will it come? Is it here? Will it come? How fast will it come? How deep will it go? Now, when we talk about inflation, don't let it deflate you. What I mean by that is that a lot of us and a lot of people get wrapped up in what's being talked about in the news. And inflation is a real thing. The Fed has always historically wanted to keep it around 2%. They're going to let it go. They said it. The Federal Reserve has come out and said that they'll let it go to 2.5% to 3%. Now, is that high? Not at all. Not at all. But they will allow it to run a little bit because there's actually something going on called reflation right now. When you go through a pandemic like we just went through, the economy really slowed down for a temporary time frame, and maybe it's starting to open up right now. But you need to reflate it to get it back to where it was. A lot of us forget that, you know, when you look at before COVID-19, the economy was doing really, really, really well. Unemployment was coming down nicely. People were making more money. The economy was doing really well. But when you talk about inflation, the easiest one to look at here is on your screen right in front of you, which is the cost of a stamp over time. It's very simple, but it really drives home the reason why we own stocks in the portfolio. One of the greatest hedges we could always do against inflation is own the proper amount of stocks in our portfolio. Look at this, a stamp 4 cents. Imagine that, 4 cents. Then it goes to 10 cents, maybe 25, 32 in the middle there, where you have Uncle Sam staring you down and says, I want you, 32 cents there. So again, things go up. Inflation is the idea of things going up and more expensive over time. Now, when you look at what core inflation is, this is something that gets tracked quite a bit by us as investors and just general public. Core inflation is really the change of costs in goods and services, but does not include those, and it actually excludes those from food and energy. Now, a lot of people say food and energy are some of the biggest things we consume on an everyday basis. Why isn't that part of the equation when we talk about inflation when it comes from the federal government? It's a great debate. It's a great conversation. As you all know, food has gone up a little bit. I have a lot of kids. They eat more and more food, and it's getting more and more expensive. When you look at energy costs, you look at housing prices. You know, housing prices are up quite a bit right now. Energy, you know, is fairly stable at this point in time. But the whole idea of core inflation, consumer price index, that is something that gets talked about quite a bit when inflation comes to be part of the conversation. Now, there's really two things. I'm not going to go heavy into this things, but this is what our team looks at. We look at M1, we look at M2, we look at money supply. M1 is basically coins and currency that are floating around in circulation out there, stuff that's in your pocket. A lot of us use credit cards now, but there is a lot of money that is out there floating around as far as currency goes. M2 includes M1, but also short-term time deposits like money market funds, some CDs at the bank as well. So M1 and M2. Now the Federal Reserve, if you look at February 11th, 2021 here, says that there's over $18.1 trillion in M1 money in circulation right now. And there's also 19.4 in M2, to the total of M1 and M2. There's quite a bit of money. There's over $1 trillion in cash right now. When we talk to our mergers and acquisition teams and our friends that we have in those spaces, there's a lot of money that is ready to go for something. And that is really key to keep an eye on here as we move forward. Now, inflation. Here's a kind of a funny one. It's a little blurry, but you have Janet Yellen on the left-hand side. You have Jerome Powell on the right-hand side. They're on the top of the Federal Reserve Bank there, and you can see money is pouring out right now. You also have in the forefront, you have a gold bug and a silver bug there. AU and AG is the periodic table symbols for gold and silver there. But when you look at this, there's a lot of money being printed. Now, what happens with all that is yet to be determined. Some say metals are good to own during inflationary timeframes. You look at copper, when you look at electric vehicles, there's 4 or 5 times more copper in electric vehicles than are in gas engines. Some say international markets will help as global demand returns. International markets will help offset inflation as well. There's a lot of different conversations out there. There's a lot of noise on inflation right now. Is it real? Some of it is, and some of it is noise. Real life speaking though, when you look at Easter, look at Cadbury eggs. Cadbury eggs are actually smaller than they used to be. You look at toothpaste apertures. Those are actually a little smaller, a little bigger. It depends on which company is out there talking about it. But these are real life things that the way that the companies actually pass it down to us consumers. So this is inflation. It's a little different than the 70s and 80s. There was huge inflation expectations back in the late 70s and early 80s. OPEC oil shocks, higher energy prices because of that. Unions were very bargaining as far as pushing wages higher as well. Inflation became very embedded in the labor market at that point in time. Nowadays, union membership is a fraction of what it used to be. Technology, I got this one from Chris the other day. Technology is nowhere near what it was 40 years ago. We've made massive leaps and bounds, and technology really helps us provide the goods and services to keep those inflationary pressures down. That was a huge piece there. So that's inflation. Now, we know that there's an acceleration in inflation and a distinct possibility that the economy roars back. The inflation is a real thing that we are keeping an eye on. We don't know for sure when it will happen in the middle point there. We don't know when it will happen. We don't know how far it will go. We don't know how far the extent the Fed will step in and basically stabilize it. There is so much uncertainty when it comes to inflation. Now, the last one is really, really important. I'll hand it back to Chris after this one. But given how much we don't know and can't know, we have to ask ourselves, should I really be making big changes with my investments because of this? That is the key question that we all need to answer. And with that, I will give it back to Mr. Chris Doty.
Wait, Ken, hold on. You didn't answer your question. Should we be making big changes, or is that just a positive question everybody should look at? I would obviously say no. I think that your answer is no. Thank you for the inflationary environment. One thing I think you'll say, and I think you mentioned it very well, is for a very long time, and even since the 70s, we have not measured the effect of technology. The fact that a microprocessor now costs 1 million times less than the processing speed that it cost back in 1970. It's an unbelievable. It has gone skyward as far as the processing power and continue to drop on a consistent basis. So the microprocessor is probably the single biggest deflationary item we've ever seen that's not measured in core inflation. So as Ken had mentioned, there's a lot going on with this, a lot of conversation about it. Stocks have done historically well during this time as well. Remember, be it inflation, be it gold, all sorts of suppositions. There's really not a whole lot of items that have done extremely well during inflation. But the key for ourselves, our portfolio are built for times of inflation, deflation. They're built for all seasons, if you will. So we're heading into spring, maybe an inflationary time, right? Inflation is flowers moving up. The one thing I think it brings up is there's a ton of opinion out there. There's no lack of opinion. If you have an opinion and you want somebody to back it up, just hop on the internet. You'll find somebody to back whatever crazy or simple or opinion you want. And it kind of reminds me, I went through this, and It's a thing that I did on opinions, and I do this very often. So if you've talked to anybody recently about, well, maybe it was politics over the holidays, maybe it was anything about, things going on now, and how people feel about something. One thing I got to tell you, opinions are always valid. Whatever you want to tell us, whatever you want to tell somebody else, it's valid. Reason being is because as I look up opinions, just the opinion, let's call it definition, is a belief or conclusion held with confidence, but not substantiated by positive knowledge or proof. So anybody can have an opinion. It's valid, right? But what's different about it, and I think this is where we get it wrong, is a lot of people say, they think that their opinions are fact. The internet is rife. News today is rife with opinions, not necessarily fact. So one thing, facts are facts. They're not malleable. You can interpret them with your opinion, but they're not malleable. So some people have very strong opinions on family, politics, and things that really are quite divisive as you go. Some are even willing to put their portfolios and entire retirement they've been saving their whole life for at risk because of a strong opinion or supposition or their own feelings about something. And we have very few clients who do this. We understand the long term of what we're doing and the faith, patience, and discipline it takes to really have a wonderful retirement and a long-term retirement that you can be quite happy with and satisfied with, which is nice. But we have a few that have done stuff over time, and it gives us enough perspective to actually see what happens when you decide to fully change your plan based on an opinion. This president, this administration, this time frame, this pandemic, this. So what we find is we want to give the all-season portfolio, the one where you don't have to change the tires in the fall and the summer or the winter, I guess. We want to have the one that could get you through all of those times. So that's what Ken's been talking about. That's what Zach's talking about. Our whole team really focuses on as well. What's really interesting about this, I think most of the frustration in the world is actually people trying to convince you that there's my way and there's your way, both opinions, but trying to convince you that their opinion should be your way as well. There is no the way. We're all going to approach. We want better things for our family. We want better things for education. We just approach them differently. So as I look at this, I saw a great sign. It reminds me on the way home from the 21-hour drive. This one struck out pretty preponderantly. It was a sign, a big, huge billboard sign. I think it was in Indiana. And it was interesting. It was a big white billboard that said, remember what I said? Love thy neighbor as thyself. I meant it. God. And as I read it, it just struck me as, oh, that would solve a lot of problems. If we love our neighbor as ourselves. But the problem is, but some people don't love themselves. So that's trouble. Anyway, it was an interesting conversation, but once you've been driving for about 17, 16 hours or whatever, you see some of those big signs on the road, like, wow, that was interesting as you go through. What I wanted to do is, and I think this is an interesting piece as well, is as we go through what's happening right now, there's a lot of opinions, there's a lot of things going on, if you will, with the research we've been doing as well, and what people think is going to happen. Remember, we don't like to do a lot of prediction. We know that when things are below their normal, they revert to the mean at some point. We can't tell you when. I think you've seen our opinion on timing, and we just don't think timing is a great idea. We have a disciplined timing, which is called rebalancing, and Zach talked about that as well. So as we're talking about that with you, we have this discipline of rebalancing, which is to take things that did really well and bring them back to normal. Like last year, it was a big thing for our convertible bonds. They were up 44%. We have done rebalancing to bring those back into line. So again, there's a lot of reasons and system behind what it is we do. But what clouds a lot of that today is Medicare, inflation, opinions on gold, silver, things we should buy. Remember, retirement is a 30+ year journey. For some of you joining us younger, we're seeing more and more people now look at the 40-year and 50 years. So retiring at 40 years old and 50 years. So looking at 40, 50, and 60-year retirements. People who are sometimes, and even your children who you've been introducing us, they aren't as keyed up anymore on what they were doing. So their first, 20 years or so in their business, they're like, okay, this is good, that was great, but now I want to move on to something else with more different meaning. So a lot of things are occurring here. It's great. We love seeing this for you. We're listening to what you're saying to us as well. So look for us in the future to provide a few more things that are going to be the live it and the give it side of the equation. The give it, you don't have a choice. So remember, there's planning, live it, and give it. Plan it is typically planning before you retire, but there's planning to do even once you're retired, and definitely planning on how to give it once you're at the end. So again, I appreciate all of your focus with us, all the the times you share with us. I know one of our clients, Steve, asked us to talk about inflation, which is a major focus of what we did today. Hopefully that you can appreciate that we talked more about that. And I think that was the inflation is a big topic today, but it hasn't reared its head for a long time, except for college prices and healthcare. You've seen the cost of both go up dramatically, right? So you've seen them in pockets. You wonder why it doesn't show up. So at any rate, I'll leave you with a couple of those thoughts as well. One thing I'd like to say, I think at the end of this is the adaptability that we've all seen during this. The adaptability we'll see on a go-forward basis of sticking to plan, but adapting to whatever occurs is really one of the key focuses of who we are. This journey, we don't know exactly how we're going to get there, but what we know is we have a plan to get there, and being intentional about that is one of the most important things we have. So Gentian retirement, that's really what we're about here. We're about helping you plan it, live it, and give it. And really what I'd like to do is stay safe, stay positive, be grateful. But before we do that, one thing I realized is I actually have my future loop. It is 9:31, but I'm going to get you a couple of things here I have from future loop, because there were some incredible things over the past week that came through about future loop, and I just want to give you one or two of them. Here's one. Sony's new Quantum 2 phone uses quantum cryptography to secure apps. Northrop's servicing robot extends the life of orbiting satellite by 5 years. This robot circulates in space. It will clamp onto a satellite and repair it on its own in space, which is craziness. Chick-fil-A, you might see this coming out, is testing auto delivery robots that can wink and transport chicken sandwiches. So you'll just see them going along the road, and they're there delivering your chicken sandwich so you don't have to go out. Something hit me along the way as I was driving from Fort Myers to here. All those mom and pop stores that we used to have, all those little shops you used to be able to go to, the whole space of retail still exists. What's happening is Amazon is just building massive stores rather than you going out to those little stores. Those things are all being compacted into these big warehouses. It's the same amount of retail space, just in different places, because there are more warehouses going up and in existence on the sides of the road than I've ever seen. And a lot of them say Amazon, they say Prime, FedEx. I went through, I think it was Louisville, where Nashville also, where UPS and FedEx are based. It's just amazing to see the amount of storage. The store is now in a warehouse being delivered to you. It's just amazing, some of these pieces that we've seen. A couple other items that are going on. GPT-3 and artificial intelligence is changing the world. Here's a good one too. I saw there's about 50. I'll just give you this one as well. They've actually got the very first, and NASA is actually working with a contract group right now to do the first real life, whatever they call docu-series of real life of astronauts in the space station. So they're actually looking at doing a reality show in the space station. They're actually right now looking at people who should be in it, looking for the actors for it. I thought it was quite interesting. So if you have the ability to be in space for a long point in time, you want to be on a reality show, they're doing casting calls right now. Go ahead and take a look for those in NASA. And I don't know where you sign up for it, but look on the web, you'll probably be able to find it. So I think another one as well, you guys will find kind of interesting. So at any rate, I want to leave you with that. Stay safe this week, stay positive this week, and be grateful. And we look forward to seeing and talking to you over the next few weeks in reviews or balances. Today, enjoy.